Hey folks, something tells me if you're watching this video, you care as much about your financial independence retire early journey as I do. And I recently was showing you guys some clips of my whiteboard that I kind of go to bed and wake up to every single day. And it kind of represents basically one of my biggest philosophies, which is if you want to get anywhere in life, you got to start by writing it down. You got to pay attention to your goals every single day. And I'm kind of like Kevin O'Leary. I kind of made a goal that I want to go to bed richer every day than the day before I woke up. And so many of you were commenting about my whiteboard and kind of how I document this stuff and like what exactly I'm doing. So today I'm going to go over the entire history of what I've done here and kind of how I've set this up. If it's something that you'd like to replicate as well, but do the channel a favor, folks. Hit that like button and let's jump right into this. Welcome back, my passive income investors. I like to breaking down my wonderful whiteboard here that sits on my vision wall, or just some of the stuff that's really cool, like this poster that I had made up years ago when I used to do magical stunts until I lost my career to this wicked pandemic. But nonetheless, that's not what we're here to talk about. We're here to talk about how I document my entire financial journey. So I wake up, I go to bed to it every single night here, folks. And this is kind of interesting because it goes all the way back, and I don't know what light bulb turned on in my head, but this all started sometime, I believe, in February of 2017. So this is, I don't know what I did or what clicked the light bulb off in my head, but this is where it all began, folks. Now, what I'm doing here is basically I take all of my finances, literally everything. We're talking about stock growth, income growth, just everything combined, what gets left after expenses, taxes, and everything. And I kind of just jot it down at the end of every single month about basically where I'm at. So this is a little bit more of an in-depth depiction than some of the charts that I show you from, say, my financial accounts. Getting right into this, guys, at the top of the end of every single year, I only started doing this for some reason in 2018, but I started documenting basically the stock growth or the entire portfolio growth against the dividend growth as well, which we can see has been pretty substantial overall. 52% in the first year, 23% in the second, 25% in the third that I've been documenting. And then, of course, we're going to explain this year, which has been quite a bit wild there. But just stepping back in time here, let's go all the way back to 2017 here, folks, when everything was really kind of just starting to look up for me. I made my first $50,000. We can see one of the biggest substantial hindrances and why I hate cars so bloody much, at which I just sold a car to buy a much cheaper one. If some of you may remember, consider hitting that thumbs up button down there, or maybe even the down thumbs button. Either way helps the channel out. But taking a look, yeah, guys, I documented that I bought a car. I think I was my first Charger. I spent maybe like $7,000 or $8,000 on it, and it took me this entire time period to basically pay this off. We're talking about 1, 2, 3, 4, 5, 6 months before my portfolio started seeing growth again, because I was too focused on paying down the credit line that I used to pay for the vehicle, at which at this time, guys, so probably sometime in this year, I was buying Canopy Growth Corp. And this is my first big movement ever in my investing career, a 50% movement on top of that. And it was all because Canopy Growth Corp. Yeah, Canopy took off, guys. I talk about that a lot. I don't think I need to reminisce too much, but it's crazy to think that my portfolio was around $55,000 and we finished 2017 sitting on $84,000. Pretty incredible increase overall. So let's move into 2018 here, folks. Now, 2018 was a stagnant year. I remember this year quite clearly because there just wasn't much going on in my portfolio. Stock market was pretty much flat for most of the year, and a lot of this growth primarily came, as I document here, from basically other income and dividends just getting reinvested. And on top of that, we usually have a market drop at the beginning of the year. But nonetheless, guys, this was like one of my most steady years. This is when I was peaking in my magic career. This is when things were just on bloody fire, as we can see just from capital contribution, mostly sitting up 23% in 2018 with a 54% dividend growth rate. Not too much going on. This is when I even did my Vegas trip, and we went down and we saw like Chris Angel, Copperfield, David Blaine, like the whole 9 yards. This was a lot going on here. So when I did my Vegas trip, guys, I kind of documented that cost a little bit of money, put a ding in my overall growth. And then along with that, usually going into the end of the year, I got taxes that need to be paid. So a lot of this kind of gets calculated into this mess. But overall, for 2018, we started the year at 84K and we finished the year at $104,000. Not bad at all. About a $20,000 even dollar increase for the year. So just to give you guys an idea of the growth rate, this is about a $20,000 increase. So this isn't huge at all, actually, in the perspective of money and wealth. I mean, a $20,000 increase is nice for a single year, guys, but nothing too crazy. But when you combine these 2 years together, this is where we start seeing the beauty of compound, to go from 55 all the way to 105 roughly is a 50K increase, or the equivalent of about 25,000 a year for these 2 years combined. So let's move into 2019, a much more staggered year. This kind of reminds me a lot of the 2017 year, where nothing really happened for the first half of the year. We started again at 104,000 here, guys. However, we saw an incredible dividend increase. Actually, this is a really good year. Same with 2018, 2019, probably my best dividend growth years, and we're going to see some similarities here in 2020 as well. You might remember the tariff war that was going on with Trump and China and everything. It was really impeding on the market, so couldn't do much about that, guys. I was still trying to put capital in, and we can see that going through the year, we still had a pretty substantial growth rate, like a really good one, going from 104,000 all the way to 130. Still equated to about 25% of growth here, guys. And this is where I actually started writing down my dividends. The dividends are obviously the red line, where I started the year at 3,500 and we finished the year at roughly 5,300, which was a pretty big jump, all in all, a 50% increase for the dividend side of things. But moving into the latter half of this year here, folks, we can see that the market started to rally here, and a lot of this was primarily thanks to Tesla, which I wrote down right here, because I was buying Tesla, I think, before post 2020, so I got real lucky here. Now, toward the end of this year, I'm not sure what I was doing, but I wrote down that I was rebalancing a bit, so I'm not sure what I was balancing out, but clearly I was selling some stocks that were paying dividends. And now finally, taking a look at 2020, probably one of the most exacerbated years we've currently had. We're not done the year yet. I got one more month to fill out, but this is probably the craziest part of this entire chart, because it's been a steady grind up. You guys can see that I did little trend lines here. These trend lines kind of just represent where my dividends should be on track and where my basic portfolio should be on track. So we can see basically going from here up to here is when everything was great, and then we kind of fell below that trend line, and right now we're sitting well above it here, folks. But taking a look going into 2020, we had about $130,800 starting until this big crash happened, obviously thanks to the pandemic, when my Tesla gains and pretty much everything just got wiped out for that first few months going into March, which was pretty intense here, guys. As we can see that I documented that the entire portfolio dropped down to a low of about 120, but realistically, guys, it dropped down to about 104, but because I only document this at the end of every month, I didn't actually mark down the dead peak bottom. I mean, the trend line, like, it should have dropped all the way down to about right here if I'm being honest, but luckily, nonetheless, guys, things turned around real quick. We had a massive rally in tech. Tesla completely rebounded. Everything just went completely to the moon and back. And this was right around the time I was still stacking up my RioCan and my MindMed, because this would have been going into May. But nonetheless here, guys, just taking a look at that growth rate now, going from 130 to where we sit now at 220, which, by the way, smash the thumbs up button, because we are sitting currently at over 240,000. So this is an increase of over 100%. It is the first time my portfolio will have ever increased 100% in one single year, and it's kind of crazy to think that it happened when I had over $100,000. So I guess this is where you really start to experience really incredible growth rates, and I can't wait to add my last little tick that'll be likely taking it to about up to there, unless something really drastic happens going into the end of the year. But I try not to lie to myself here, guys. I try and make some very straightforward and honest goals, which is why I kind of document this trend line, basically based off me putting about $20,000 away a year, having that kind of growth, which luckily the compound effect takes over, and we've been able to do much better than that. With my primary goal of basically the end of 2021 going into 2022 was going to be about $250,000, sitting around 250,000, and we're basically sitting there already, guys. So let me step back a little bit. I'll give you guys a full zoomed out look one more time, just so you guys can get an idea of what I've done here. So I just want to finish up by saying that there's nothing more important, guys, than literally writing down exactly what you're doing, where you want to be, how you're going to get there, because honestly, if it is not in the forefront of your mind every day, you will slip up, you will forget, and eventually your dreams are just going to fade by. But because I'm documenting my financial independence, retire early journey here on YouTube, I really kind of prioritize minimalism, everything that I do in my life, to kind of get to this point where I can be a little bit more comfortable. I live in a really expensive area here up in Ontario, about an hour north of Toronto. And it's really crazy to have this much money, but say that, look, I can't even really afford a house with this kind of money, guys, because the average home up here is about 800,000 CAD. So I have enough for maybe the 20,000 or the 20% deposit. So me and my girlfriend discussed this a lot, because essentially you're either going to be house poor if you buy a house, or you can basically sit in a situation where you just have to say, look, don't rush anything here, right? Like, what's the rush? Like, if you had maybe $500,000 or getting closer to $1 million, it would make a lot lot more sense to say take 200 or 300,000, go put a deposit on a nice home, and you have a place to live, because then at least you still have your portfolio cash flowing probably enough to cover those basic mortgage payments. But in the reality and the perspective of trying to find a way to life that is the path of least resistance to basically me giving up my time, and that is primarily through the most passive income sources, which is the stock portfolio, because to me, real estate is rather active income. It's really upfront active. And I guess you could say the same about growth stocks and everything else. But at the click of a button, guys, to just do some research, you don't have to drive anywhere. You don't got to go to Home Depot to buy parts to fix toilets. I mean, and even as a renter, guys, so long as you're saving your money, you're picking up the phone so somebody else can fix the problems and you can focus your time on building wealth, you're still going to end up in a wonderful position. I don't think the BS people tell you that you're never going to get ahead if you don't own a house is just wrong. But in light of all of this, I pass the question off to you. What do you guys think in that comment section below? But stay cool, stay awesome, and I look forward to catching you tomorrow.